Today we're going to talk about missing trades. Stay tuned, we'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading, and today we're going to be talking about missed trades or missing trades. Now I got a couple of questions sent to me about missing trades, and they've looked at my videos, some of the videos on the 1 hour charts and the 4 hour charts, and they've talked about how they've missed trades. Now, one of the things that I look for with 4 hour and 1 hour charts is where the overlap times are. So for example, you know, on a 4 hour chart, if you're using New York, my charts are New York close charts, so the first chart for me starts at 6 a.m. in the morning, which is 6 p.m. New York time, and the close of that would be 10 a.m. Perth time and 10 p.m. New York time. So I'll look for, I don't trade in the Asian session. When I look at the Asia close, for example, if I go to the Asia close, which is 2 a.m. New York time, 2 p.m. Perth time, that's the 8th hour, the second 4 hour chart, and the 8th 1 hour chart, and that's typically when the Asia close going into the London Open. I'll look for on the pairs that I follow, if there's the patterns or the ranges or the rectangles, or if there's a indication of a re-entry into an existing trend, whatever that is. But I tend to look at during the day on those intraday charts. I only follow about 6 pairs, and part of the reason is I'm not trying to hit every single trade. Most of my end-of-day trading using 4 hour and daily charts and weeklies, I'm only looking at a few pairs for real valid signals. So again, I think what you need to look at with your own trading is that if you're missing trades, or if you feel this pressure that you're missing out on trades, you're trying to maybe take too many trades. You know, a lot of trading is just being patient and waiting for those 1 or 2 type A setups. And you know, I've been guilty of taking smaller, you know, shorter time frame trades in different situations, but the real great trades where there's an asymmetrical risk reward, there's only going to be probably 2 or 3 that are really ideal setups. So I can narrow that down on the weekend to maybe, you know, 5 or 6 pairs. Monday I'll look at the ranges, but I'm looking for really specific patterns after the opening range during the week in terms of the, you know, intraday chart setups. On the end of day, well, that takes me, you know, a minute per chart, so I can go through 20 charts pretty quickly because I'm looking for very specific patterns with the end of day charts as well. So if you're missing a trade, you know, even if you miss a trade, so what? That's part of trading. And you know, obviously you're going to miss trades. If you're a discretionary trader, you're not going to hit every trade. And even if you hit a trade, you might hit a trade that doesn't go anywhere, and you might miss the one that moves. But again, welcome to trading. That's how it is. And that comes back to your preparation, your analysis, your skills, and your dedication away from the charts in terms of what your daily routine is like, in terms of mapping and monitoring and analyzing those charts. So you have to work on getting that down to a daily ritual that you can go through these charts and be able to identify your highest probability setups, you know, reasonably quick, and not spend too much time on it trying to manufacture a trade. So again, you're going to miss trades. I'm looking for 3 or 4 really basic specific patterns on the 1 hour charts, but I do look at those 4 hour and 1 hour crossover times. So for me, that's going to be, you know, at 6 a.m. Perth time, so 5 a.m. New York, 5 p.m. New York, 9 p.m. New York, 1 a.m. New York, and then again 5 a.m. New York. So there's not to say that I won't have a trade signal on the hourly chart at a different time after that 8 p.m. candle, which is 8 a.m. on my 24-hour charts. But again, I match up the 4 hours with the 1 hours, and I look at both time frames, but I'm looking for very specific patterns on the 1 hour charts, and I like to see those patterns evolve after about 12 hours. So I'm not looking to just jump in and get a trade. You know, I've done all those stupid things on short time frames, and let me assure you, if you're trading on something shorter than an hour, you should really look at your hourly charts, because you are going to see markets take out highs and lows usually on those hourly candles, especially between 2 a.m. and 5 a.m. New York time. So be very careful if you're entering outside of the hour, unless it's right near the close of those candles. Be patient. Don't be worried about missing out on trades. It's going to happen. You're going to miss out on tons more, but just make sure that you're able to narrow down the charts that you are following to the highest probability or possibility trading setups, and then just focus on executing your trading system, sticking to your money management rules, and really focusing on an asymmetrical risk-reward opportunity setup. So hopefully you got some value out of today's video, traders. Don't be worried about missing trades. Just focus on executing your system on the highest possibility setups, on the ones that you are following, and then manage your risk and go from there. Have a great trading week, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.